Scaling your business, part 1 for the junior class. Would you consider merging your business with that of another entrepreneur? A merger is when you combine your business with one created by another entrepreneur. Most people think that mergers only happen between large businesses, but that is not true. I have done some really cool mergers in the past, and our business would not be as big as it is if I had not mastered the power of merging. Mergers have always given me an opportunity to make my business bigger, faster. We call this getting at scale. It is still about the two key formulas of the entrepreneurial playbook: innovation plus marketing minus cost equals profit. A business that has identified and reaches out and solves the human need scales as a result of 3 P's and nothing else: product, people, process. You might have a good product that solves a customer problem in an innovative way, but you don't have the people who can drive the other pieces: marketing, process, cost management. If you hear an announcement that so and so companies are merging, would you be able to break down the benefits using the entrepreneur's playbook without waffling? Will the merger create a better company? Will it produce profitable solutions to problems of people and the planet? Professor Colin Mayer, Oxford University. When you merge two companies, you are not looking for 1 + 1 = 2, but rather 1 + 1 = 4 or even 5. If you are considering a merger, you must look at the products, the market (customers) and the marketing. Innovations going forward to create better and more products. The people. Who is going to be doing what in the new company? What is their caliber? What is our ability to get access to the best people out there? Who are the top specialists that drive this business going forward? Leadership and management. Who will run it? How do you accommodate the founders if they are still around? Tough one. What about the board of directors? The processes. A bigger company requires more sophisticated management processes, from IT to distribution to HR to financing. The costs. By combining the two companies, we must be more efficient. This means some people will probably have to leave, whilst new ones come on board. Finance. This is a skill. I know some of you don't like to hear that, but I am not here to make you happy or join a self-pity party. Many people don't access money because they lack skills to raise capital, and it might be a good way to solve this problem by merging with someone else who has that skill. In a merger, there is usually no exchange of money. The owners of each company must agree on a valuation procedure to be followed. These are quite straightforward for a qualified accountant to execute. Let's say business A is valued to be worth $25,000 and business B is worth $30,000. Then business C, the merged company, is worth $55,000. The owners of A owns 25 out of 55, which is 45%, and those of B own 30 out of 55, which is 55% of the new company. The owners of the merged company must agree in advance who will be the CEO and who will be the chairman of the board of directors. This is captured in a proper agreement called a shareholders' agreement. Once signed, the courts will enforce that agreement if there is a dispute between the parties. The new owners must agree in advance how the company will be organized after the merger, including who initially occupies key positions. Mergers can be easily destroyed if the founders have big egos, as they require an acceptance that no one can now make decisions about the company on their own. On Business Wars, can you remember one really famous mergers? There are many benefits of doing a business merger. For your homework, I would like you to research these benefits and add them by the way of comment. Scaling a business requires learning who you are as a company and what you offer your customers. How do you compare to the competition? What do you have that no one else does? What are your biggest weaknesses? What makes you so powerful? What is your message? How do you disrupt your industry? Tony Robbins. Any merger or acquisition involves thorough due diligence. A shout out to Adao Viane Mavongo, who last week asked a very important question: how to do due diligence with investors. My reply: there are two processes in due diligence. 1. Due diligence by an investor on you and your business. A professional investor, someone who is not your friend or relative, will normally require you to set up what is known as a data room, where you dump all legal documents and accounts relating to the company. It must have the latest accounts. If it is an existing business, a business plan, documents on contracts, registration, proof of payment to taxi and other regulatory bodies, bank statements. They will require that you have on hand your accountant and your lawyer to go through all the documents. There is usually a standard checklist that the investor sends you. 2. If someone approaches you and asks to invest, you are entitled to ask them to give you information that confirms who they are. The normal procedure is to contact a corporate lawyer, someone experienced in business law and practice. They would draw up a list of things that the investor must show. It is tricky to do because most big guys don't like it when some younger guys start asking them to prove they are who they are. You just have to be wise to get what you need. If the investor is someone from your local community, discreetly ask around to see if you are dealing with someone who is honest and will not try to take advantage of you. Ultimately, it is important to have your own lawyer help to put the agreements that are signed by all parties. A merger is never based on the size of the companies involved. It is always based on analysis of benefits. You can merge two companies that are not even operating. You can merge companies that are not the same size. It is not about 50-by-50 share of ownership, although it can be. Two struggling entrepreneurs trying to launch the same type of venture can come together. That is kind of merger. But always ask the question, what are the benefits to the business? if I do this, then also what am I willing to give up in order to get the benefits? Then finally, can I work with my potential new partners? What do I know about them? I have told some of you this story before. I had already been in business about 8 years on my own. I was trying to launch a new business called Econet. I knew that when I finally got a license, I would need someone with skills in finance at a higher level than what I had. One day, I bumped into a friend of mine who had recently returned from working as an international banker. "What are your plans?" I asked him. "I wanted to start a bank. Would you consider suspending those plans and joining me for a while? I would give you 10% free equity if you join me as a CFO. Jeff Mazwembe said he wanted to pray about it. Then after a few days, he returned and said, "I will do it, my brother. But once we get it off the ground, I want to go to my bank." Immediately, he set about to help raise the largest amount of money I had ever raised. It takes humility to accept what others can bring to the party that you can. Sometimes it can be something technical like finance or marketing, but more often than that, it is process. Knowledge about how to organize business, which is found in people who have worked in large companies. There are things I have taught you again and again. This is what I cannot help you with: finding the right partners. In my first 15 years as an entrepreneur, I suffered the curse of bad partners. I tried everything to find good partners, but it almost seemed like I could just not get it right. At one time, I hired one of the biggest banks in the world to find me a good partner. They sent a guy from that country to do DD, and guess what he did? He manipulated the process to ensure that his friends and relatives becomes my partners. When I found out, it was too late. The bank fired the guy. One partner parked outside the gate of my home with a loaded gun. I was cheated out of money, out of my shares. It just would not end. I was cheated by locals, and I was cheated by the so-called international investors. It almost seemed as though everyone wanted to take advantage of me, and they will. And that is why you must knowledge up. Even though all these things happened to me, I've never stopped trying to find the right partners, because at one time and the other, you have to learn to find the right partners. You must do your background checks on people. It is your responsibility. No one can do that for you. You must focus on people and organizations that have high integrity and professional excellence. Do not get into ugly fights with people. At times, you will just have to walk away so that you don't get hurt personally. Take the lessons from it and push on to the next one. Let's start a revolution. I want you to take the lessons on the power of entrepreneurship to every school and college in the developing world. Tell them about how it really works. 1. Explain to them the underlying principle behind making money in the modern world. Innovation plus marketing equals profits as long as you manage costs. You can either come up with an innovation or you can at first follow or partner with those who come up with interesting innovations. Just don't violate copyrights and IP. When you have a great innovation, you need to use it to develop a great product or service. Then you raise capital, either equity or debt. Equity is always better. Get partners, better people, your own generation, who are in possession of skills that will complement your own efforts. Knowledge up and skill up continually and incessantly. Read books, read articles daily, attend seminars and conferences online. Be like a football fan, but for everything, entrepreneurship. Once you have set up a proper company, make it limited liability to protect yourself in case things go wrong. Register for tax and pay it. Keep your eye on the day when outside investors will want to see proper accounts. Next, to make the business bigger, you need to master the 3 P's. Product must be constantly evolving and expanding through constant innovation. People, without access to talent within and without of the company, then you have no chance to do anything. Process, bringing in the right people who understand how organizations are designed and built is important. Arts like accounting, HR, distribution, IT drive process. Never be emotional about your business, even though it is your baby. It needs to be allowed to grow and become an adult who can stand up on their own 2 feet apart from you. Everything is in the numbers. Are you wired to see innovations? Remember what I taught you about innovation. Innovation makes money. It does not matter what type of business you are in. If you want to start making money, become conscious of innovation as a tool in your hand. It is possible that you might be blessed with being the person who sees a new innovation for the first time. But even if you don't, it will not stop you, because you can at first follow. I explained this open secret to you many times. Identify your sector of interest by knowledging up for it up every day and building skills, because the go-to guy, someone everyone knows to be the fundi of that subject. The moment a new innovation emerges, you see it. Let's say you read that someone is doing it in India or Guatemala. Reach out to them on their website or through LinkedIn. Anyone can be found who is in business. Listen, I think there is a market for this here in DRC. Can we please partner? Maybe I can be your distributor, or you can license me. I want exclusivity for my market. Even if something has a patent, you can still approach them for a license of the technology. There are a lot of people who have built great businesses using the innovations of others, including franchises. But how can you see new innovations if the only thing you are interested in reading is politics and scandals? You can't, so dial back on that stuff. It will not feed your family. From today, you can start a personal training program to see innovations. Let's say you have a small plot of land. Before you rush to grow maize and cassava, reimagine your approach. What other innovative crops could I do on this land that no one has done before? Someone saw tobacco as an agricultural innovation 100 years ago, but all you think of us is tobacco also. Come on, you can do better than that. Who will lead the next agricultural product innovation? Is it not you? The true entrepreneur is a pathfinder, restless to find another path in their field of expertise. Each day, draw up a list of innovations that you observe. Within a week, you will break through. If someone asks you about any business that you know, can you break down your description of it in terms of the profit formula I taught you? MTN vs Airtel Nigeria, they are separated only by their approach to innovation. The rest is just noise. What if every entrepreneur and those who work for them actually saw the objective, their job, in terms of innovation? What would happen in your business? What if every would-be entrepreneur could only get support from lenders and investors if they could demonstrate there is an innovation plan at the core of the business? What if venture capital investors in the USA and Israel and China are willing to pour billions into a business once they spot that the founders have an innovation? Be an innovation conscious entrepreneur. That, my friends, is the end of the matter.